Kia ora, welcome. My name is Jess. I'm in the external communications team here at the FMA. I'm joined with Stuart, our chief economist, and today we're going to talk a little bit about KiwiSaver funds. So to kick us off, I don't actually know what that means. So what is a KiwiSaver fund?
It's a great question. All right, KiwiSaver funds. One of the challenges of financial services is all of the terminology, and it can be really challenging. A fund is something that your money is placed into that's invested somewhere. So let's try and break that down. It's a big pile of money, and that money is invested into ideally lots of different places. So some shares, some bonds, maybe some treasuries, they're bonds from the central government basically, maybe some property. So you're currently putting 3% in, and that money is going into something called a fund.
Okay.
And I'm putting some money into my KiwiSaver, and that money's going in. Let's pretend that it's going into the same fund. Mm-hmm. Lots of different people right across New Zealand are contributing money into that fund. And then there's an individual called the fund manager who invests the money to get a return. And so all the fund is this basically big pile of money that's invested by a fund manager to deliver a return to all the people who have contributed money through their KiwiSaver into that fund.
All I heard was big pile of money, and I was like, that sounds great.
Big pile of money, yes. All right. Well, a little bit of that big pile of money are your contributions.
Okay.
Does that make sense?
It does. You mentioned at the start, let's assume that we're in the same fund. So I'm guessing that means there are different funds?
There are different funds. So the second most important choice you're going to make with your KiwiSaver, after you've decided how much you're going to contribute, is which fund you're going to put your money into. And that's really what we're talking about today. How do you choose the fund that you're going to put your money into?
Okay, so let's chat a little bit about what the different funds are, and then I'm going to ask you to tell me which one I should be in.
All right. So which one you should be in is, again, pretty challenging question, but let's talk about the funds that are available. So in New Zealand, there are currently 31 KiwiSaver providers. Now, your next question is probably what's a provider? Mm-hmm. And that's a company or a firm that manages one or more of these funds.
Okay.
So most KiwiSaver providers will offer a couple of different funds. All right? The first one will be called a conservative fund. And that's, just as the name suggests, it's a fund where the fund manager or the investment manager, same person, is looking to make quite conservative investments. So we would expect that fund to grow over time, and we would expect it to grow reasonably slowly, but be quite safe. Okay?
Yep.
Conservative, sort of as the name suggests. At the other end of the scale, most KiwiSaver providers will also offer a growth fund. And this is a fund that we're hoping will grow a bit more, a bit faster, a bit more quickly, but it might have a higher amount of risk. Now, what does risk mean in this context? It basically means volatility. So probably what does volatility mean? Is that the next question? Yeah, for sure. Okay. Volatility is like the amount it bounces around.
Okay.
So let's think of a stock on the stock market, right? One day it's $5. The next day it's $5.10. The next day it's $4.50. The day after that it's $6. It's bouncing around. It's volatile. Did you get a cup of coffee on your way to work today?
Of course.
How much was it?
I don't want to say it now. $7. Oat milk these days, so expensive. Wow. I know $1 for oat milk. Anyway.
I mean, you're drinking some fancy coffee.
Coffee's expensive.
How much was it yesterday?
I usually get the same thing, so it's the same.
It's the same every day.
Yeah.
So it's not volatile.
Okay.
Is the point I'm making. So it's a bit more like a conservative fund.
Okay. Now you're talking my language.
All right.
About coffee.
Coffee, right. So at one end, we've got the conservative fund. We expect it to grow slowly, but not be very volatile. And at the other end of the scale, we've got the growth fund. We expect it to grow faster, but it's going to be more volatile along the way. It's going to bounce around like the price of the share, not like the price of the cup of coffee.
Gotcha. So last week,
Jess,
what?
There's one more. There's one.
I've got a burning question. No, talk about the last one.
The last one is in the middle. It's a balanced fund. And as the name suggests, it's about halfway between the conservative fund and the growth fund.
So it's less risky.
It's less risky than the growth fund, but more risky than the conservative fund. Now, they're the three main types. You will hear some other terminology. Sometimes providers, they offer an aggressive fund, and that's more aggressive than a growth fund. So even more expectation of long-term growth, but even more expectation of volatility. Now, you had a burning question.
So last week we talked about contributions and how there's a default contribution. I'm just going to assume that there's a default fund that you land in as well. Is that the less risky option? Is that the default?
It used to be.
Okay.
It's an interesting question. So it used to be the case that if somebody didn't make a fund choice, they would get put into that conservative fund, a lower expectation of growth and lower risk. But recently that's changed, and default scheme members, and we'll come on to what that means, they are placed in a balanced fund. And let me explain why that is. So if you're a very long way from retirement, a bit like yourself, those pieces of volatility, they don't really matter as much because you can't take the money out unless you take it out for a house deposit.
Yeah.
But you can't take it out to retire on for 40 years. So if the thing bounces around from one day to the next, it doesn't really matter to you. What would be better would be if you had a little bit better expectations of the growth of the fund. Think about it from your perspective. It doesn't matter how it moves today, but you'd like a bigger number when you do ultimately get to retirement. So that's why it was changed from a conservative fund into the balanced fund, to take account of the fact that many people don't need to worry about the day-to-day movements of the markets, but it would be better if their retirement savings grew more in the long term.
So Stuart, you talked about conservative, balance and growth funds. I'm not a very risky person, just to tell you. So which should I go for? So it makes me nervous to go with the most risky option. So
what should you do?
What should I do?
So the fact that you've brought up risk is really important. If you were to go to a financial advisor, they would ask you about your risk tolerance and they would ask you some questions about how you feel about risk. And that would be to try and understand something called your risk appetite, and then you would base your fund choice between conservative, balanced or growth on how you feel about risk or your attitude towards risk. Now, that's certainly one thing that you can do. And that will help you make a choice between those three options. It's a really important thing to do for somebody in their 50s, somebody in their 60s who's quite close to retirement. For you in your 20s, I would encourage you to think about the idea of growth being more important than current volatility. Okay. So I would encourage people in their 20s to be more towards the growth end of the scale than the conservative end of the scale. So that would mean being maybe in a growth fund, or if you feel that you're a particularly risk-averse person, being in a balanced fund. But I would be a little bit worried if people in their 20s were in a conservative fund. And actually that's why the government's changed it so that default members or members who don't make a choice get placed into the balanced fund because it's more suitable for people who are a long way from retirement.
Okay. I'm just thinking if there's people listening that are like me thinking, shoot, I'm not sure which one I'm actually in currently. Is this something you can find out, and then also can you change it, like your contributions, or?
Absolutely. Your KiwiSaver provider should be able to tell you the fund that you're in. They should be able to give you some information on the fund. Sometimes they'll give you something called a product disclosure document or a PDS.
Okay, awesome. So people listening who just have no idea which they're in, they can go and find that information out.
Absolutely.
So Stuart, if you don't know who your KiwiSaver provider is, how can you find that information out?
So if you go through IRD, if you go on to the My IR account, you should be able to see who your KiwiSaver provider is, and then you can reach out to them and they'll be able to give you more information.
So Stuart, I feel like we covered quite a lot today. And for others listening who might be similar to me, what are the key takeaways that they can get out of this episode?
The key takeaway from this episode is to really look at the fund that you're invested in. So probably that's going to be either a conservative fund, a balanced fund, or a growth fund. And then you want to have a think about whether that fund is suitable for you. It's very difficult in finance to provide rules of thumb, but if you're in your 20s, your 30s, or your 40s, I'd much prefer to see you at something that's at the slightly more risky end, something in a growth fund, or if you're a particularly risk-averse person, being in a balanced fund would be okay. If you're older than that, if you're in your 50s and your 60s, you really need to focus on your whole financial health and how much money you're putting into your KiwiSaver and your plans for retirement. And it's really not possible to provide rules of thumb other than it's really time to focus on these things if you're not sure.
Awesome. That's really helpful. And where can people go for tools and resources?
So there's lots of different tools and resources around. Your KiwiSaver provider should be giving you some information. I would also really encourage you to have a look at the Sorted webpage. That's really helpful. It's run by the Retirement Commission and they provide some useful tools, some useful calculators and some information to help people make decisions about their KiwiSaver.
Awesome. Thank you so much for your time again today, Stuart. I will see you next week. Thank you so much for watching. If you'd like to find more information, you can go to our website, www.fma.govt.nz. We'll see you next week.